Good morning. All right, event started. Oh, welcome, Lacey girl. I'm gonna get you all dialed in here first. E- All right, Lacey girl, I just tagged you in general in a little write-up. It says, "Welcome to Green Room. Please read through." And if you go through that, that pretty much lays out everything. Just take your time when you got time later today. What to expect, the terms and conditions, obviously, then a capital management breakdown. And then pro trade zone is where the alerts come in, as well as long swings. And then for pro setups and ideas, you'll be looking at Hawk Holdings and then those down there. For entertainment in the after hours, we have Nizzy, who throws out really nice, how do I want to say this? Uh, sports bets if you want to take them. And then if you have questions, fire away in the questions, and you can connect with everybody else through X accounts socially. So, all right, let's see here. Good morning. How are we doing, B17? Everybody having a good weekend?
Good morning.
What's up, buddy? Is your house heated up a little more?
Yeah, it's a little warmer today. It's in the 50s, so it's a little bit better.
Yeah, that's tough when the house the heating
You
goes
know,
or something for a couple
and
days
it's great.
and
It's
your ass
crazy.
off.
It's crazy. They still have us on a generator, the power company.
Well, they still haven't fixed it, huh?
No,
Shit. I bet you people are a little fired up.
well, it's only me. That's the only problem.
Oh, so they're gonna take their sweet old time and say, OG's fine. He's got a couple coats.
Yeah, apparently there's a part that they're waiting for. I don't know, some bullshit. Whatever.
Well, shit. I hope that gets fixed for you really quick.
Yeah, hopefully they got to dig up the side of my house.
Oh boy. What everything else good? You have a good weekend?
Yeah, everything's cool, relaxing.
Hit any action this weekend? Or you got any action for today?
No, not yet. Yesterday I missed by I needed somebody to score. Oh yeah, Puka for the Rams, and he didn't score.
Dude, the Rams, they
Yeah,
they look good.
yeah. That looked pretty good. But it was good games. That Bengals games was really good.
The Vikings, dude. Nelstradamus, are you a Vikings fan, dude?
Yikes.
Oh man, I'm a Packer fan. Right? I was born in Stillwater, Minnesota, but I grew up in Wisconsin. So I'm definitely yeah, a cheddar bender.
And I'm a disappointed 49er fan.
Well, you guys had your couple years of opportunities, and now it's our time.
Yeah, we'll be back.
Yeah. All right. Let me pull up the playlist for today. All right. Give me 1 second. Is there anything specifically you guys want to cover that's not in the layout that we have for today? Today is weekly recap, as always, broader market outlook, top breakout stocks and sectors to be watching, and themes. We're going to talk about themes today, and then trading with a higher VIX. We'll cover that one more time. I feel like that's something that it's just a quick little topic that needs to be covered consistently. as volatility kind of stays elevated, and then EMA and Wyckoff strategies and how they fit together. And then we're going to cover a trend line strategy. A lot of the OGs in the room know how to use, but some of the new people don't. It's very simple, and it teaches you how to read price action as well. And it also is probably like one of the most reliable strategies you can use with as you grow and learn how to trade better, or even if you're just using an alert, or how to get into an alert properly. So that's one of my favorites actually. I think the trend line strategy, as simple as it is, I think it's probably my favorite to use. So uh, then we'll talk about 2025 Q1 outlook and some goals, and then we'll cover mindset again towards the end. So let's get started.
Wyckoff,
If you guys have any, go ahead.
Wyckoff put some interesting stuff this morning at like 2 o'clock in the morning in his site. You check that out.
Oh yeah, thanks. Let me see here.
Yeah, he put some interesting material there. Was posting some stuff.
Coach size still looks good. Expect a bounce in the Fed intervention. Yes. Yes. Yeah, Wyckoff and I talk every day. I've been trading with him for a long time. Let's see here. All right, did yesterday. Okay, he's looking at redistribution. Yep, that makes sense. Fit. We can see energy. Yeah.
A little outlook in there about the about
TLT.
what could happen.
Yeah. Dude, that would be crazy if the real estate sector does that play. Yeah. Just wait till the 10-year starts to rip above that pivot. Yeah, that matches.
10-year looks so bullish on the larger time frames, weekly and
Yeah.
monthly, especially.
All right, let's get started. All right, weekly recap. Last week, Christmas week, pretty interesting day. We obviously had the FOMC, or interesting week. We had a FOMC sell-off the week before. They plunged it down, then squeezed it right back up. And then Monday, they opened it up, and we had a lot of similar patterns. So let me zoom in here. So we had Monday, it popped up, dumped down, and squeezed right back up. This was kind of like, so it dumped down overnight on Sunday and then squeezed right back up to Monday open, and then dumped it back down on Monday, and that set the low for the week and ripped up. We took swings from this particular trend line that broke right here. We took Friday swings. We even took Tuesday swings off this for a potential boost over this previous high from the previous Friday, which it happened. We got it. Those contracts went crazy. And then in the room that Tuesday, we were in calls as well. Took a really nice. I think it was like 700%. It was crazy. Then, oh no, actually, won't. I take that back. We had a couple of people that hit 1,500 to 2,000% on this move up and out. Our Friday calls went really nice too, 150, 200%. So from SPX standpoint, that was the pattern we were kind of expecting to happen, and it played out really nice. Then as we got into later in the week, we had another drop in Thursday, and then they ripped it back up Thursday to make a top for the week. It was really interesting because I thought this was our UTAD. For those that are new, a UTAD is a top. Like, it's like a distribution top. Let me see here if I pull this up. Okay, and UTADs can come. So this is a distribution top, and we use Wyckoff. Not like we're not like obsessed with it 24/7. Yeah, we have a gentleman in here. His name's Volmageddon Vince, and he has this channel called Sir Wyckoff. Anyways, he's a great Wyckoff trader. I trade Wyckoff too, but I also use other things that are in confluence with it. So I don't prefer to, to be, intraday looking at, in my mind, I have the schematic in my head. I understand where we're at in the bigger picture, but I don't like to be looking on the 15-minute. He does. It's fine because it helps me too where we're at in time frame. But I prefer to use, you can see how this is the UTAD. You can see how here's the top. It broke the UT. Okay. And then you can see here. Okay. Let's go to the 15-minute. This is what we were looking at. So here was the UT right up in here. Okay. And you can see this top range right there was the UT range. You can see down there the UT. This is the bottom of the range, right? Or sorry, the bottom of the top of the range. And then here was the lower part of the range, right there. So you can see that as it shot up, it was sneaky. It was really sneaky what they did because we were looking at, so we look at two different types of distribution schematics. They're all the same, but there's only two. There's in the same with accumulation. So accumulation and distribution, they're the same exact patterns. The only thing that's different is this, phase C on both of them. Okay, so you can see here, there's no shoot up, where in this one it shoots up above the range, right? This one, it does not shoot up above UT. It stays below, distributes, and then breaks down. Okay, that's what we call a D2 distribution setup. Okay, that's the only difference. The only difference is in phase C, there's no UTAD. A UTAD is where it shoots up above the range, traps bulls going long of the range break. Right here, you can see. And it shoots up, chops, it makes an M formation, and then dumps back down into the range and breaks it. Okay, so it's tricky when you're finding them because you can see here, like that day, we did not swing puts, but we had the March puts and February puts, but I wanted to swing like weeklies or a week out because we were waiting for this, but we didn't. My gut was telling me this was a UTAD. This little shot up right here, but Vince was like, it could still be distribution in this zone, like, and so we were staying neutral to protect everybody. So, oops. He was thinking this. This is where we were at, right there, and right here. So we could have gotten this shot up to 60-55 to 60, 60-80, right? So, but anyways, long story short, we didn't swing heavy puts, and let me get out of these. And it made an actual UTAD because it snuck up above the range, and come on, there we go. Snuck up above the range right here, popped up, and that was the UTAD. I call it a short-legged UTAD. Okay, it shoots up above, wicks above, doesn't really make it very clear because a clear one would have been like this. And it shoots up, and then it distributes down, and then it does this, and then breaks, right? So that would have been a very clear UTAD. We would have been shorting this heavy up here. That's what we were looking for. Okay, so, but the good thing is, then Friday opens up. We're a little red on the markets, and it opens up. Let's take a look at the 30-minute here. No, we'll take a look at the 15. It opened up right here. It pushed down. We said, hey, we're going to take puts off SPX 6000. This is US 500. This actually had a divergence of about 7 points between SPX, but it did it to a T. It hit like 6,000.08 on SPX, and we did not alert them, but we called it out on voice. I said, look, I like puts off of 6,000. So for those that are new, sometimes when the market's moving fast and we're trying to, trim positions, get in positions, I can't always just be like, typing out the alert because it takes time to do that. 90% of the time, the alerts will be typed out. But if you're on voice and you're listening in the morning as the market's opening up or before the market, you'll know exactly what we're looking for, and you'll see, listen to my voice. When I say, hey, I like taking puts off 6,000, that's a good risk. Okay, that statement means take puts off 6,000. That's a good risk. Okay, and looking at it, you can say, okay, what's he looking at here? Okay, so he looks at this, all right, and he says, you can ask, hey, where's your risk? Oh, well, it's a 5-minute close above 6,000, right? So that's a big spot, right? Because it's a big gamma level, right? And they broke it pretty aggressively off the open, came back up, and the retest was failing, right? The retest of that level. So bulls were weakening, and the sellers were coming in and controlling the price action, all right? Anyways, we caught the 5950s, and a couple other people had other, like the 5900s and other stuff like that. And we caught, I think it was the thing said about 530% or something like that off that rip. So that was a fun trade. Then there was also a call out for the 5900s off this zone right here that went, I think, 130% or more. That was another nice trade. Then we called bottom. When the price was chopping around up here, I knew that the pivot was going to be 59.33 on SPX. So here's SPX, here's 59.33, and I missed the number by 5 cents. Yeah, because the low was 59.32.95. Why do you think that I had that as my pivot? Does anybody know? This is a big spot for me. Like for me, 59.33 SPX is the motherfucker spot for the market. If we get under that and cannot reclaim it, it's short the pop every day of the week, all the time. And we're going to keep flushing and probably want to swing puts off that breakdown. Because this structure this level is going to completely change how risk is taken on in the market. You can see here, if they like right now, this actually doesn't look that bearish, right? You could say from this point, it's a higher low here, another higher low, okay? But price broke here. Now what happens? It's a big deal. Now it's changing, right? If it breaks, it cannot reclaim this level. The structure is going to change dramatically, and the bulls are going to start de-risking, and you're going to see something like this happen, and then it's just going to keep going down, right? Until structure starts to change on the smaller time frame, the 15, the hourly, right? But right now, structure is pretty bearish, structure is pretty neutral, I would say. It's pretty neutral. It's leaning bearish, right? But still we're above this big pivot here, okay? And then also I want to point out on US 500, I don't know how many people are looking at this, but I noticed this the other day. Check this out. Okay, so here is the daily, excuse me, right? You have this massive rising wedge, right? But if you look at this smaller rising wedge from July to August low, and then up, you can see that what happened? Well, we've tapped it, held, tapped, and now we distributed up top. This is the daily, okay? And then we had a massive FOMC breakdown of this structure that we're holding, right? And so then they bought it up. But look what they did. Anybody see anything here? What's that? We could just fire off on live if you want. Anybody know what that is? Nobody knows what that is. Okay.
Is it a reversal? But
Yeah, that's an evening star, brother.
yeah.
Yeah, that's a reversal setup. And what else is it?
Hitting
What
the trend
happened?
line.
So this is the trend line.
Oh,
Okay. And you know what? I'll just do this little EDU session right here. Okay. So trend line strategies 101. Okay. This is a perfect example. Okay. This is the daily. This happens on all time frames. I like to trade these off the 15-minute, any time frame really. But this is the daily, right? So right here, you have a tap, right? And then you have another tap right there on this wick. Now your trend line should be drawn off this daily wick, right? So then this daily comes up, it closes. This candle opens up, it pushes down, and it actually taps your trend line. You take that long all the time. You take that long. You should have had this trend line immediately off this doji and said to yourself, wow, this is a reversal setup, right? Okay. Now, if this taps, you're like, oh, I'm long. Well, I actually don't think I did this, but I should have. This should have been an easy tap and go, tap, and then you can ride that up, 200 points through the election. Now, so tap and go. You got tap, go, and then if this thing comes down and you see this big wick here, you can long this wick, right? Where's your stop? Right here. Well, we're holding this trend line, so that's kind of a tap and go as well, right? And you can just keep riding it. Then the second one would be a breakdown. Okay, a breakdown has two parts to it. There's a failed breakdown, right? And then there's just not a failed break. I don't want to talk about that one. I want to talk about the breakdown. The breakdown is, yeah, okay. So this is a breakdown of this trend line. I'll make it really big. So this is the trend line we're talking about. It never retested. So it just broke down. It broke through the trend line. It didn't come up retested. But look what's happening now, right? Price came down. It broke down. So that's strategy one that can happen is price can break down without retesting it. Right? The next part of a breakdown is a retest, a failed retest. Okay. So right now, we've on the larger time frame, let's go to the 4-hour. We broke down. So that was strategy one of a breakdown, which is no retest. But now it's retesting and it's failing. These are failed retests right here, right? That's a failed retest. So looking at this is a short all day, right? A little risky, right? Because they could have, dropped it down and then gapped it up and ripped it and really screwed people. But that's intraday, that's a great spot to take shorts off of because that is a failed retest. And you can take puts here at 60.44 and your stop would be a close over 60.45 to 60.50 roughly, right? That would be your stop, because then if that would be the next piece. A failed breakdown. A failed breakdown would be if this price came up, it's above the trend line, comes back, retests the trend line, holds, and then builds structure and moves on up. That would be a failed breakdown. Throw a 1 in the chat if you got that. And we want to look at this stuff intraday, bigger time frames, all the time frames. Okay, it's a great strategy. It's really basic, but it just requires you to be able to read price action. Right? There's another one that happened Friday. Okay, great. A couple people got it. So from here, this low to that trend. Okay, this is Friday. Okay, a lot of people took calls in the room Friday. Okay, from my low point call, it tapped it, came back up, and I said you can take longs off 93, or sorry, 59.33. Came back down and it tested it again. Okay, a lot of people took longs. I think Clayster did. I'm pretty sure he did. Well, when you're in the trade, you take your trend line. Well, here's your trend line. Here's the low point. Here's another tap. Here's another tap. And you should have the trend line drawn. You take calls, either if you're in calls, you just sit and chill. Scale out on an extension and then add more on the trend line, right? Because the algos are kicking in at that point, and they're going to hold this trend line until when? Until too many people get too heavy on one side of the seesaw and they want to rug them. Too many people chasing late, right? We talk about this all the time. Sentiment, what are they trying to do, right? So, yeah, you could have taken this. Here's another this within that strategy. Tap and go. All right, see the low. Oh, I missed this. Okay, I'll grab calls here. Gonna ride them all the way up. Oh, I missed it there. Okay, let me grab calls here. Oh, ride it up. And as soon as you're in calls down here, if you got them, or here, and you're riding, and you're like, okay, well, I'll hold as long as we maintain this trend line. Well, we're starting to break. Okay, I'm out, right? Start getting out, EMAs are starting to flatten out. I'm going to get out, take my profits, maybe leave a runner in case it's a failed breakdown. And then all of a sudden, what happens? It breaks and the retest fails. Look at this. It tries to reclaim it and it gets stuffed, right? And then it drives back up. It gets up here, but it doesn't reclaim the uptrend. And the next candle opens below the trend line, and you can short that all day. Where's your risk? Above the previous doji, right? Above this dragonfly in a downtrend. So your risk is right there. If you get in here or here, my God, that's an amazing risk to reward on puts, because look at this. You're catching, a quick 10-point move down, and then it moves down even more. So that was a 20-point move on SPX from here to there. That's 150, 200% move on a basic strategy, right? Very basic, okay? Now you could do the reverse. Look at this. Here's your downtrend, okay? You miss this move and you miss this move. Well, I'll take calls if this downtrend breaks. Boom. Pops up, get calls, and then what? MOC ripped it up like crazy. So, these are two just really nice strategy, or one really nice strategy that has a lot of different opportunities that you can take advantage of, as a trader. And the best part is guess what? It fits. It complements and it fits into Wyckoff. So look at this. Here's an accumulation schematic. Okay. What do you notice about this? Okay. This is a downtrend right there. Oops, hold on. Let me just do this. This is so much easier. Okay, here's your downtrend right there. Let me make this fast. Right, there's your downtrend. Oh, let me take it long when it goes. Okay, now what? Now here's my uptrend. Okay. A lot of people think, oh, well, Wyckoff this, Wyckoff that. It's not that difficult, but once you understand, look at this. There's the uptrend. Sell, break, retest. The retest failed. Boom, stuffs, right? And then look at this. There's a downtrend. Tap, boom, breaks the downtrend. What happens? Retest. And then fucking rips. So this strategy complements Wyckoff, right? So then you look at a flag pattern, right? Look at the flag. Here's the flag. Here's the pennant right there. It's trend line. What's happening in the pennant? It's compressing. Price is compressing. We take this and move this over here. What's happening? Excuse me. In this pennant on SOS. Price comes up, right? And it's doing this. It's compressing. Boom! Right? This compression is built on structure. We talk about the tube of toothpaste all the time. Okay, so the tube of toothpaste, it's compressing, and then sellers are getting out, buyers are controlling it. It's in a flag above a range, and then it rips. Okay, one of the things I wanted to do today was clear up. There's a big misconception that people think, oh my God, I got to learn Wyckoff. I got to learn all this shit. No, you don't actually. You can study it, learn it, understand it, but then in the bigger picture, you can say, okay, well, all right, I'm going to draw this downtrend. Okay, well, I'm drawing this downtrend. Where are we at then? What does this mean, right? Okay, Wyckoff posted this. Okay, great. There's my uptrend. All right. Now, if we're in actually an accumulation process on the 15, right? This is an accumulation. Well, we have an uptrend. Where are we at in the schematic? Are we in phase, A, B, C, or D? And where would be the best point for me to grab calls? You can do this stuff, right? And if you like something that fits your eye, you can ask Wyckoff or me or any of the other guys in the room that understand it, and you can have nice risk rewards. Now let's see how the EMAs fit into this strategy as well. Okay, we have an EMA strategy, and the EMA strat is slick, and it's so awesome, but it doesn't work 100% of the time like everything else. It's highly reliable, and it allows you to define your risk, but it's not like, oh my God, I full port this because this thing always works, right? I would say it's like a 70% hit rate, or more, depending on who's getting it, who's drawing it up, the type of ticker, the support that it has on the volume, as well as how compressed it is. Right. So let's talk about this strategy. Let's see if we can find one. We actually had one that did not work. I'll go over it. This one did not work. This is one that did not work. All right. And I'm going to talk about why it was good. This is good. This is what you want to do. You want to understand which ones work, which ones don't work. Okay. So these are the two lines that I had drawn on Carvana. There was supportive flow out of the money. Okay. However, even on the hourly, what was happening is, they were coming out of a downtrend, and it was flattening. It's flattening up, and this stock can move fast. And we were looking for a range break above this pivot right here, right there. It was compressing, right? We had a low, had a higher low here, and then another one. Okay, and then we got into calls up in here, and they just got smoked because the price never reclaimed and wasn't compressing hard enough up. And actually, we cut calls, which was a great cut. So we cut calls here. They were down, I think, 30%, and went down to a one marker. And then obviously that once this trend line broke, you cut it. But and then look what happened. So like, this strategy did not work in this time. But that doesn't mean it's just not a good strategy, because this strategy is fucking awesome. This thing prints fat. I will use one of my favorite ones to show you how it does work on the upside. Actually, you know what? I'll do Apple. We'll do Apple. Apple is a good one here on the hourly back in during and I'm only bringing these up because these are the ones that I remember really closely. There's other ones that we use too, but these are the ones that I have in my head. Okay, this was right here. Okay, this is Apple, like September. Okay, very similar setup, right, to what's it called? Carvana, right? I mean, identical actually. Here's your trend line. There's the short term, or the wider one. Okay, here's your other trend line. Okay, and where's your box? OG likes boxes. Right. Okay, really, it was gonna pop before that. So there's the box. Here's the low point. All right, and so, so this strategy requires
Hey, hey, Cells, real quick. That's acting as a supply line over there, right?
which one?
I
What do you
mean,
mean?
demand zone
Yes,
where
yes.
you're drawing that red
This is
dot.
like an accumulation schematic zone, right? So if you look at this, would be this right here, right? So I have my box is AR, right? So this is hourly. So what happened? Okay, here's PSY or PS, preliminary supply, right? Okay, it shoots up, comes down hard, right? This is SC right there. Okay, so we're in phase A. This is happening fast. Boom, shoots up. Now we're at AR. Now it comes down, ST. Then it shoots up, creates B1. This is now out of phase A into B1. Okay. I just like to mark the top ranges. It doesn't have to be perfect on the strategy. I just like to get the box right, because ultimately my risk level is this top wick up in here. Once it pops that, I know it's gone. So I don't really need to drop a lower range, trend line there. That does not mean shit to me. See what I'm saying? Like, this does not mean, in this strategy, it doesn't matter. Okay. Because really you're looking for the break. You're looking for this break out. That's all you care about. You don't care really about this move here on this time frame. This is a smaller time frame play to catch a breakout. And what this does is it helps you catch a breakout of, my whole goal with this strategy is on the hourly time frame to catch like a 1 to 2 day move where the price moves like, $4 to like 12. Like, boom, pops and you're out. Make your couple 100% or your 150% and you get out. Like, that's the deal, right? We're not looking for 500% here. We're not looking for 20% either. But once it pops and it shoots up to 30%, you scale a little bit, leave some cheese on it, and then let that shit rip, right? And you know where you should be knowing exactly where your targets are. And we do, for those that are new, we do intraday. It's kind of, I don't know what you call it. What would you call it, OG? Like school, like, or like intraday, like just practice. It's like practicing, trade plans for everybody so that everybody can be on the same page and learn how to trade properly, and identify risk. So we have SC pops up and it goes through this whole schematic relatively quick, right? And you can identify those based on this hourly and even the 15-minute, okay? So let's see here, get out of here. Get this out. All right, so now you have your box drawn, and it doesn't even matter. I just wanted to point this out that this schematic is happening this fast on this time frame. But you don't have to know the schematic to understand how to make money very quickly on this. So it's happening, right? So you have a downtrend on the EMAs, vertical. You don't touch calls. But once you see an aggressive overextension and it comes back up and gets another big rejection, now your range on this low is getting set, right? The range is being defined off this low shot down here and the big rejection right there, that big wick. So you can identify your box early on before the EMAs start to even flatten, okay? Then you can say, wow, is there any supportive flow here on Apple as this thing starts to coil up, right? You have your trend line here, okay? We talked about the Wyckoff schematic and how trend lines are built within it very, very clearly. That's why it's important to understand what you're doing on all time frames, right? So as this schematic is going through the accumulation phase quickly on the hourly time frame, you can see here, what is that? Okay, that trend line that I just highlighted there, let me make it really big, is this trend line right there. That's right there. It's about to pop and get in there. Actually, I think it's actually back here. Yeah, it's actually back here, and then comes back down, tests it right there, jumps up, and then you could say, then it pops and just keeps going. But the point is you're drawing the trend line here because you're saying, okay, how would you trade this? This is how you trade it. And we actually called these out. So we said we wanted to be safe. So we bought a week and a half, 2 weeks out on Apple calls here, right? And if it broke down, our thesis was if it broke down under this line, right, we could grab in here, right? And then if this broke, then we would look to get our last scale in off this wick right around here because they could have done this, right? Right? That is part of this. They could have slowed it down and then created a spring, right, within it, as opposed to this is a accumulation without a spring, and then made it go longer, and that's fine because knowing the trend line, your resistance, you're like, okay, well, I'm going to grab calls. Okay, they tapped it here, they're holding this range here, intermediate range. I'll grab calls here off these wicks. Look at all these wicks. It's telling us buyers are aggressive. Okay, I'm going to have time. I buy here. Okay, if it breaks this trend line, it's okay because I got another supportive trend here that could hold, right? And if they break this, okay, now I need to be a little more cautious and I need to make sure the daily or the weekly closes above this trend line. And it obviously did, and those calls went hundreds of %, right? Because what happens? What's happening here from economic perspective, like supply and demand, right? Back to Wyckoff again. Supply and demand, guys. It's sellers are in control, and we'll talk about gamma and the exposures. The negative gamma on Apple is increasing, right? Puts are in control. The puts are in the money here. They're deep in the money. They're gaining deltas. They're accelerating. Calls are getting smoked here on Apple. And so people are selling calls, which creates more downside pressure, and they're buying puts, which creates more acceleration. However, when this candle happens, now that's a warning shot, right? The selling climax of a warning, right? To saying to the sellers or the put buyers, like, hey, we might be getting reaccumulated on the smaller time frames. So then that means that the sellers are getting out of the way. They're selling and realizing their gains on the puts, and the calls are starting to accumulate more. So then what happens is the gamma is changing underneath the hood of the market for this particular stock, and it's starting to go from negative to slightly less negative to maybe neutral. And then the big orders of calls start to hit the tape. And there is big money that hit the tape on this thing. And what happened? It fucking ripped. And the target, I said the 200's the target. Why is the 200 the target? Well, we're pretty far away from the 200 on the hourly. Plus, the 200 matches with a nice area of supply, right? So as that flips, that gamma, all these puts are going to get smoked, and it's going to create a little squeeze. Right? And it shoots up where it get rejected right there, because what happens? What happens all the time when you get away from the 200 aggressively? It reverts. It mean reverts. Here's an extension up, boom, back in, down, up, down, up, down, back up, down, back up. Shoots up, comes back in. Right? Pretty cool. You can back test it against any stock. It always works. Right? Can it get extended and keep cruising? Yeah, but it's risky for whoever's trading that side of the tape to keep being greedy and greedy and greedy, because the further away you get, the more aggressive the sell becomes coming back in, or vice versa. The more aggressive the snap back is. Right? So being on the right side of the trade is huge. Understanding where your risk is huge. Right? You could trade weeklies here and just say, oh, if it breaks here, I'm out. Yeah, you could take a weeklies right there and say, all right, tap, tap. Oh, shit, it's compressing. Tube of toothpaste, pop, done. Right? EMA's downtrend, EMA's flat. Compressing price, pops, EMA's right. Grab now. What do? You grab the retest of the 21 or the 13 of the 21. Grab the retest. If it fails, if it breaks down under the 13 of the 21, then you get out. But it never does. Look at that. Holds all the way up. So if you have time, that's how you stay in the trade. Right? Or you could do a 4-hour candle by candle method, right? So it'd be 4-hour candle by candle. You're like, oh my God, it's fucking ripping. Let me do 4-hour candle by candle because I got all this time on my calls. It's not a weekly. Maybe I got 2 weeks out. I'm going to do 4-hour candle by candle. Let me show you this. Here, check this out. So this would be 4-hour candle by candle on a swing trade. Right? This is like if you grab a little time and the stock goes fucking bananas, and you're like, well, shit, I already scaled my profit or my investment at 30% or 50 or 100% because it gapped up. Well, let me leave the rest on, but I want to manage this properly. That's the key, managing the trade properly, right? Because you can see here, as this candle pushes up, it comes down, but where's your stop? Your stop is going to be on this first 4-hour candle way down here. And then once this candle closes, right, this 4-hour candle closes, or sorry, this 4-hour candle closes, then where's your stop? Right there. And then it shoots up, comes down, and then this candle opens up, and this candle goes up and closes here. And then it gaps up the next day, right? Yeah, gaps up the next day. Now where's your stop? It's down here. Right there. Right? And then this one goes and closes. Now where's your stop? It's up here. Okay, that's candle by candle method. Now this candle goes up, boom, it's up. Wow. Now my stops is all the way up here. And this candle closes and this candle goes. Okay, now it stops right there. You just took this from 216, 217, all the way up to 228 using a candle by candle strategy, a multi strategy of compression, right? Wyckoff built into it, trend line strategy to define your risk. Yeah, and then you maybe had a little flow to support it, and then the EMA strategy, right? And then you use the candle by candle to stair step your way through the trade. You scale 30, it's 30, 40%, a little bit here. You take off half of your position, maybe, right, at 30%. And then the rest of it goes and it maybe makes 200-300%, and you have a big trade, as opposed to, oh my God, I'm up. That's fine too. As you grow as a trader, you want to do that because that's how you squeeze the juice out of every little trade, right? And look what happened, candle by candle. Then all of a sudden, boom, gap down. All right, I'm out. And you don't even get killed because of the buck. No big deal. Done. So, any questions on that? It's like one of my favorite alpha. I don't even know what that word is. Almagami. I don't know. Let me Google it. I'm probably pronouncing it wrong. Oh, amalgamation. Gotcha. Okay. I'm picking up what you're putting down. All right. Where is it at? There it is. Yep, 100%. Yeah. Yep, that's I just. All right. Cool. Anybody have any questions on that? All right. Good. All right. Let's take a look at the 10-year. Thing is super, super bullish. We've been watching this thing from the lows. Like from down here, we had this whole structure built out, right? When we first opened up the room in August 30th or 31st, we had this. We've been watching this, right, together. And I said down here, I said, we'll be going up here. It's just going to happen. And that's just how this is playing out. Now, the big deal is this. How high do we go? Right? And I think we will cool off on Monday. Possibly. I think it cools off a little bit. I think the market's going to open up green or something close to it. But the big deal is this pivot up here at 4.73 and change. 4.73, if that pops, the markets are going to get smoked. They cannot, there's no way billionaires are going to keep their money in the market if the 10-year is shooting up to 5%. Too much risk, especially as high as the markets are going. So, let me pull up the next thing. Okay, so let's take a look at the sectors. Okay, let's take a look at the daily first on these sectors. All right, so this is XLK. This is the big dog of the S&P. Does everybody understand what the S&P sectors are? Just throw a GIF or a 1 in the chat if you do. Really important to know. This is how you find rotations. This is how you find market weakness. This is how you find everything that you need to know. Excuse me. So this is XLK. This is an intermediate trend line, right? I have not drawn a trend line from this anchor low yet because I want to see more price action come out. I mean, you could do this, really. You could do that and, see what happens there. We could do that for sure. But the most important thing that I'm looking at here is what's happening in this schematic, right? And what's happening with price. Okay, EMAs are still in an uptrend, right? But they're weakening, and it could be the start of a downtrend for tech, right? And if you look at what's happening up here, it's a lot of small candles. What I typically see in the smaller candles is distribution. Big sell, boom, buy up. Take a look at the volume. Okay. Take a look at the RSI. Okay. They actually have sell, sell, sell. It's kind of intermediate. They are buying this though. Nothing crazy, but definitely something to note. Right? The RSI is right. So one thing that could happen, and I'm just being neutral here, is this RSI could break out to the upside. You have a head, a left shoulder, and now a right shoulder happening. However, that doesn't mean it's going to. So it could do this, right? And tech rips and the markets go to all-time highs again. However, it could do this too. It could shoot up and reject, shoot up, reject, reject, and then just fucking die. I've seen that actually happen on the RSI a lot. So that could happen on this time frame on the daily. You have, price is compressing pretty good up into this range here. So this week is going to be a decision week. Personally, I have a tiny little tiny baby Jesus bias. And that bias is I think that after the 31st, the markets are going to get smoked. That's just my little tiny baby Jesus bias. I don't like to have bias. I like to stay neutral. However, that's what I'm thinking. But we have our pivot, SPX 5933. You have Bitcoin coming back in. You have XLK. These EMAs are not like technically these EMAs are not are starting to shift. And I bet you if Bags threw up his VOMI, and it's starting to roll. Like I bet you it's starting to roll. I could grab the ribbons. Let me grab the ribbons here just for fun. I don't use the ribbons, but they can be useful. Okay, here's the ribbons. Okay, so they're still thick on the daily. Let's take a look at the 4-hour. Yep, they're starting to get that look, that crazy look in their eye on the 4-hour. So this is when the price, same thing with the EMAs. Let me just get these ribbons off here. So EMAs, do the same thing as the ribbon without the ribbon, but the ribbons give you a nice little picture if you like those. But you can see here, look, right, the ribbon, or sorry, the EMAs are supportive, prices stacked. Then the ribbons cross over, vertical. Now they're back up over, so the crossover happened. Now it looks like it's about to cross over again, right? So how I like to play these EMAs, and I think Bags likes to play the ribbons, is as price breaks and these things tighten up, these EMAs really start to tighten up and it starts to curl down. Usually you get a sell down and then it reverts up, shoots up into supply, and that's up just above the ribbon, and then it just gets smoked. Is that about right, Bags?
Yep. Well, so for me, so the ribbon are the ribbon is EMAs. Like the top of the ribbon is the 8 EMA, the center, the white line is the 21, and then the bottom of the ribbon is the 48. So the once it breaks below the 48, that bombing is confirmed, and then usually more downside.
Perfectly said. All right. Now let's take a look at some other sectors. So, we could say right now that the thesis of Green Monday blood after is, relatively a decent thesis, right? We have a supply zone right here. A thesis is something where we're not looking to be right, but it's like an educated guess that based on some facts that we're seeing, that we could see this push up, chop, rejection, and then a bigger downside move. Okay, now let's look at, let's make an alert there. XLV, healthcare sector, looking very constructive. We watched this breakdown. Okay, and you can see now it's starting to build support, but it's not out of the downtrend yet. We have some really good call flow on AbbVie as well as J&J, longer dated calls. UNH has been getting lit up a little bit. That's pretty decent flow. These are the top sectors. If you don't know the top weighted positions in the sectors, then you can go down to where is it at? Knowing the basics, and I posted all the top sectors. All the sectors with the top weightings. And it's in Knowing the Basics. It says S&P 500 sectors and top allocations. If you have a Webull account, which I do, I have no money in my Webull account. All I do is use it for. I like their how it's designed, the whole system. But I don't like trading it. I think the fills are garbage. But anyways, you can click there. You go to asset allocations on the thing, and then it shows you the top weighted sectors for that time. And then you can also see what sectors are leading, right? So if you want to say, okay, so if we're saying, XLV looks like it could be, setting up for a bigger move out of this possible inverse head and shoulders, right? Because what is this? This is a defensive move, a defensive play, right? So you have, risk on, risk off. And so if this is setting up for a breakout to this upper trend line, who would we want to target? Top sectors: Eli Lilly, United Healthcare, Johnson & Johnson, AbbVie, everyone I just listed off, right? So then what you do is you go over here, we say, let's take a look at these.
got hit big.
UNH, I like this setup actually. If you buy the fear, we talked about buying the bullshit.
Yeah, the
It's all about
540s
buying
for March
bullshit.
21st got hit 1.13.
So what does that tell you? Based on the March QQQ puts, so March QQQ puts got hit for 20 some million. I haven't checked the tape to see if they sold, but the sector's looking ready. It looks really close to a nice breakout into the new year. Here's the weekly on Johnson & Johnson. I mean, anybody see anything that's kind of interesting on the weekly time frame with candle structure, channel allocation, or channel location? I'd say. Anyone see something setting up like kind of crazy? Like maybe we should take it Monday. I would like you guys can participate too. You can speak up, say whatever you want. This is open mic.
Triple
Yeah.
bottom.
Yes, sir. What else is setting up? Thank you for posting that, Zane.
A doji?
You're fucking right, baby. Look at this. This is a morning star reversal setup, like on the fucking weekly, guys. Where do you think this stock is going to go by March or June, whatever? Yeah, probably June. These things are probably going to break out. I mean, 5 million. They're going to break this out of the channel. It's about to go parabolic. I like those actually. We're gonna fucking take those. I'm gonna post that in my channel, so I don't forget. Copy. Yeah, that's a sexy swing trade. All right. So thank you, Zane. Appreciate that. So those hit last week within this doji, right? Now look at this weekly channel, you guys. This is from 2022, right? And it's just been downtrending, downtrending, downtrending. This is gonna break out. Like, I don't even need to this is a layup. Fucking layup. So I've been watching this downtrending channel from right around in here and just been waiting and waiting and waiting. And I have a lower target here of 42, but it's not gonna hit. It's done. Because this candle on the weekly is a reversal setup. So how do we know it's a reversal? Well, you have a bearish engulfer right there. And then you have an indecisive candle right here. That's the doji or spinning top, right? And then this week is the deciding week for the reversal. Whoops. And so what we want to see, we're going to get in these Monday. This is a very low risk trade, guys, like low risk. You could grab those June 155s. You could grab the June 160s. You're like, 160? That's, yeah, 160s. They're probably going to be 3.5, 3.3. You could grab the 165s for June, and I'd be fine with it. At probably 3.0, 2.8, right? 170s pushing it a little bit, right? But because the thing is it's not just gonna go straight up, right? It's just not gonna do that unless it does something like this. Straight up, 164 piece, right? But that's 4 weeks, guys. 1, 2, 3, 4. So 4 weeks puts us basically end of January. So if you're gonna take this swing, you have to mentally prepare yourself to buy it and then leave it for the next 4 weeks at minimum to be able to hit the top of the zone for this thing to actually be a good trade, right? Then within the week, we can look to trade it intraday on the way up, right? And then the whole trade will be paid for. And then if you have all that time and they break it out, right, on earnings, give it a little up, stop hunt, and then stair step it back up and out. You could see this thing up at 180 by June. If you got the 165s for dirt cheap, or even maybe the 170s, it's a bit of a stretch because you might get theta fucked over here. But you want to be relatively in the money before when it breaks out, because I bet you they'll chop it up and build a last phase breakout, which would take time, and then go. So you want to make sure that's why these guys bought slightly out of the money, because they probably they're probably expecting it to take time. So where's our risk at now if we get in this trade Monday? Well, it's going to be right here on this low. It'll be this low. We could set it at the weekly low of that doji. That's fine too. You could do either or. And then if it reclaims, you can add back in. But adding here and then setting your risk either at the last week low or the previous week low is a good spot to set your risk at. And if it breaks down, you cut it. And how are you going to scale in? You're going to scale in 1/3 size, right? Or you could scale in half size, because this is a good trade and it's a very good risk to reward at this low. And then you could say, I'll scale in 2/3 size here. And then if it starts to go, okay, if it breaks this downtrend here, okay, it comes up, breaks the downtrend here. Once it does this, comes back down, retest it, then you can load back up, or load the last third size. Once it holds the retest and starts to go, you can add more size. You can add even, I wouldn't say add, yeah, you could add 2 week out calls, but really within the structure, I know how this shit's going to play out. So watch this. All right. So this is the daily, right? And as this baby pops out, So let's say if price, comes down, chops in here, and then gets a move out this week, right? Or into the next couple of weeks, and it pops out. It's probably going to chop there, retest, come back up, and then it will start chopping. Once it will get stuffed right here, right at 151. This thing's going to get rolled. So if you look at this spot right there, this thing's going to reject there. Once it rejects there, it could do this. Yeah, it could go up, retest, get everybody looking to chase this gap, and then it could get stuffed. And then if it comes back down, it could come back down, retest this, or it could do this too. So there's a couple scenarios. It could come out, retest, break out, shoot up, come back down, retest this zone right here, and then build structure for the next move up and out. I think that's probably more likely what's going to happen. So I wouldn't really want to trade this ticker on the weekly time frame unless there's really good flow and it came down into a supportive level where we could catch a big move up quick. Because as this gets up and out, it's not gonna do, I don't think this thing's gonna move fast out of this thing. There's too much supply up here, and they're not gonna let people just jump in and ride this baby up. Plus, you have the daily EMAs. They haven't even flattened out yet. So this is a longer time frame play. Just nibble in, build your box out here. There's your box, and you nibble in off the lows. As this thing gets through, as the price squeezes through and retests and starts getting reaccumulated, now you're looking for a break. And once it starts to break this top right here, and you'll see it flag out, right? This will build a flag, and then it will fucking rip. Probably off news, probably off earnings, something like that, right? So that's how I want to play this. It's nice and easy. Let's take a look at, so the EMAs, we want to see them start to flatten. Okay, and then on the 4 hour, let's take a look at the 4 hour. The 4 hour is already flattening. It's still going to take some time. On the 4 hour, though, this looks good. Yep, EMAs on the hourly are starting to rise, right? So you have a downtrend here. Downtrend, flattening. Now what? Uptrend. It's in an uptrend now, right? So this is supportive. So if you take a look at the hourly, we can take and start to draw risk, define our risk within this. Now it's starting to curl down, so I wouldn't be surprised if this thing does break down, come back down into this range, right? And come back up to build structure before it breaks out, right? So this is kind of what I'm looking for out of this particular stock. Premiums are going to be great. IV's low on it. Just a really nice setup. Let's take a look at UNH. So same thing. However, it looks like there's a rising wedge building out here. Also, it could be an ascending triangle. Let me see here. I don't know. I don't like that. I don't like that setup, the way that looks. I would say, though, this is your box. Right there. And then there's let me think here. So it'd be SC. Really, this is the lower part. It's a little tricky. Let me go to the 4 hour, see what this looks like. Wow, this 4 hour looks great. I for this one, I would just draw a couple lines here. Right? These are areas that I think if it gets up and over Like these would be good targets here. So I have a couple boxes, right? Because this stock can do this. I've seen this shit happen before. It it can just range trade, right? I would have to look at this, and I know Vince has this actually as a pretty bearish schematic, but I personally think they're going to retest this breakdown before if they're going to rinse it. I think they have to retest this upper break. It didn't get retested. You could say this is a retest, but not really. It broke. And that's right at 446 or 546. They have earnings coming up January 15th. Okay, you have an inverse head and shoulders created on the daily that's breaking, right? So to me, this is a nice buy out of the money calls, right? For a gap up through earnings, because a lot of times, like if the market starts to sell off, the healthcare sector is gonna be supportive. It's gonna be a flight to safety. And this thing has not broken this downtrend since, it's been a while. Look at that. So they're going to retest this. They'll give it a retest. And that's right there, 543.86. So that's a big level. You have a big wick here. This is testing the bottom of the zone. Now the question is this going to get reaccumulated and then move up, right? Because it just went through a UTAD distribution and broke down, right? Now we have a doji, right? And now it's moving back up and out. So this will be an interesting one to watch with the flow. AbbVie, this thing is looking like it's going to retest this deal right here. So here's a flag it's in. There's a big ass gap up here, right? I'd like to see it retest this 4-hour flag before. It has not retested it. So what I'll do is I'll make a trend line. I'll just draw an alert right here, 175. And then I'll put another one on the trend line. Okay, and this would be a nice one to get into. The ones that we have, the 192.5s, but those things are getting cooked. And I don't know if those are going to pay. I think the 180s are going to be 185s are going to be a better play off this trend line here. Off this retest. Clearly you can see they want to defend this whole gap, fuckers. This gap from here, 84 up here to 200. Look at this 4-hour. There's a sell order block sitting there. And they're going to probably pop it up to 85 and then rip it right back down. Unless there's a news catalyst that pushes it up. All right, so that's AbbVie. All right, now let's pop over quickly to a couple of other sectors. I'm going to start moving fast. If people have any questions, fire away. Energy, looking constructive. Okay, it's coming into the apex of this big ass wedge. It's going to have a big move. Most likely will be up on this. The RSI is oversold, and it's already doing a kind of a retest of the neckline breakout of the IHS in the RSI. So I want to be mindful of that, but I definitely would like to look to long XOM. This is a great sector for defensive oil drips, tech drips, oil rips. That's the saying in the market. So, this has had a huge downside move. Well, it's really far extended. So now let's see if it can rebound. So we'll be looking at XOM. XLF. This is not a good setup in my opinion. I think, people are looking to long the banks, and there's supportive flow. But just because there's supportive flow doesn't mean it's going to get smoked. We see big whales get cooked all the time. All the time. Look at MSTR, perfect example. Hundreds of millions of dollars hitting calls, getting smoked. So, This sector looks weak to me, very weak. I bet you pull up the vomit or the VOMI, it's about to vomit. Yeah. Yep. It's close. And that's the daily. Let's see what the weekly looks like. Oh, the ribbon's thick on the weekly. But this thing could come down to the bottom of this order block at 46, and I'd be interested in getting some calls. There's some really good structure on the weekly here off this level. It's still $2 away. If this sector dumps a couple bucks, good night. Okay, so the retest is trying to reclaim this big trend line, right? But what is the reason why I think it's going to pressure down and sell is because of, anybody see anything? Big cat, you want to say it? I know you see it. We talk about compression in here a lot. Yes, boom, cream. Very nice, very nice. So you said it. EMA's crossed over right here, and the EMAs are being suppressive of price. So, and you have a sell block sitting right here too. So EMAs are suppressive of price, but what's important to me is it's compressing into a trend line. Tap, tap, breakdown, retest fails. Breakdown, retest fails. But reclaim, and it's sitting right on it. So you could say that this is this is the uptrend right here into the EMAs, and there's a reversal setup right there to come down. Now, that doesn't mean it's going to happen, but it's the probability of it happening is high. I mean, you could really just call this move down an extension and this move back up a reversion to the EMAs back to do what? Testing this supply up in here. Are sellers in control? Are people looking to trim, to sell? Yeah, looks like it. But if buying pressure comes in or data becomes great, they can squeeze this thing right back up to the highs, right? But you have such defined risks. Then you look at the top weighted sectors: JP Morgan, Goldman Sachs, a lot of these financial sectors or financial stocks, right? And then you can see which one matches the sector. So perfect way that you really want to be thinking about the market is, if this sector is in a downtrend and it's starting to break down, well, I want to make sure the stocks that I'm trading in that sector are aligned with it. What does that mean, aligned? Aligned means that the structure looks the same, right? So let's take a look at JP Morgan. Pretty similar, right? Similar look. Let's pull up the double screens. Okay, so here's JP Morgan. Apply these to all. And then here is XLF. XLF on the daily. Okay, so there's XLF on the daily. Here's JP Morgan on the daily. It looks pretty similar, So the structure of this looks very similar to the structure of the whole sector, right? Only thing is JP Morgan's above the EMAs on the daily, where the sector is underneath, right? And then let's take a look at Berkshire. Okay, here's the daily on Berkshire. Wow, this looks identical, almost identical to it, right? And let's look at Bank of America. Damn, looks identical, right? Identical to the same thing. Look at Wells Fargo. Looks identical. So these stocks, look at Goldman, same thing, identical structure. So these are the stocks that you'd want to be targeting because they're in alignment more so with this sector, right? So then let's take a look at which one? I mean, these are the heavyweights, so it doesn't really matter. But Morgan Stanley, yeah, very similar. So honestly, like the XLF sector is in a position where, they have earnings coming up, guys. Second week of January. Excuse me. Sorry. So maybe we see some weakness into earnings and then they rip it through earnings, right? Like now we should start to think about, how are the financials going to act going into earnings, right? How many people are long financial calls, right? And if we can trade some of these financial stocks, they pay really good, like really good. So I think, we'll be watching the flow on some of these. I love to trade JP Morgan and Bank of America. These premiums work really well. So, this is something that I'm going to definitely keep an eye on. Okay. So now let's go back to the next sector. Can you please switch to the code runner? Let me see here. His setup? I don't understand. Can I share his setup? Yeah, exactly, RS. Code runner, just what do you mean by that? It says, can you please share these Y or his setup for TradingView? There's no setup. It's he hand draws everything and changes it. You don't want we can't do that. His stuff is proprietary. And the thing is you have to realize too, Code Runner, is, as you guys, are, become more familiar with, how V trades, and we've got a handful of people that are in the room now because they want to trade Wyckoff and learn Wyckoff and stuff. And you have to realize, I'll say this one more, I'll say this multiple times, but everybody's risk tolerance is different, right? And the schematics can change. Johnny knows. I've been trading with Johnny for a while. Schematic can change like fast. They can fucking super cycle a 15-minute from distribution to reaccumulation overnight, float the market, and then put the hourly from distribution into reaccumulation. And then the next morning you wake up and the whole schematic changes, right? So you need to really be aware of that. And that doesn't mean it's this or this or this. Yeah. It's like, you just need to understand that's just part of the market, right? And yeah, the dailies, all this stuff, they're playing out really nicely, right? From the stuff that we're looking at and that he's drawing. But the schematics can change, guys. And so just be nimble, be neutral. You just want to trade the legs. Okay. Yeah, exactly. Price action's king. And he'll say the same thing. Johnny will say the same thing. And I'll bring this up here. When you watch his stuff, when you look at, his thing, and say, for example, we're all looking at calls, whatever it is, right? If we're in, you do know, the whole point of trading, right? And just like I'm talking about some of these strategies that pay really big, about the the breakouts or the breakdowns, so using the EMA strategies, they all fit, right? However, right, you don't want to be trading in here. You don't want to be trading this shit. You do not. I'm telling you, you try to trade this shit, you're going to get smoked. You want to trade from here to here, but you better buy time, because why? You have a lot of choppiness here, and that could take a day or two, right? The best trades to take are right here. Straight up and out. Buy time. What stock did we just talk about that's in this position? J and J. J and J is in this position right here. Okay. So J and J is going to break. All right, I meant the basic Wyckoff trading view to set up my chart. Do you mean these photos that I'm putting in here? I'm still here. Let me unmute you. You can come on and talk. Just talk, bro. You can talk. It'd be a lot easier. But really, for those people, well, he's typing out stuff. You know, you want to trade the legs. You know, this is phase E of distribution. Okay, then you can trade SC to AR. It's really hard to time, right? But if you get ST, you can trade this leg. This was a nice leg too. You know, B1 to ST is a really nice leg to trade. This one's hard as fuck. And then this is the GOAT trade. I love that trade. We've done that a few times in here. And then let me pull up the other map for those interested. Here's the distribution setup. Yeah, I think we're close on those. Okay, so distribution setup. Best legs to trade, obviously. The UTAD break and down to LPSY and then down here to D South. Okay, and then once it M forms, and then this leg's dirty. That's a dirty trade. That whole section is money. Then the other good trade to take is SOW to UT. So it's here all the way up to UT. And then even the UT reaction down or the IHS. This is IHS here. The IHS flag and RIP is a decent one to trade too. Nothing crazy, but those are my favorite ones. AR to ST, if you can catch it. Sometimes it's tricky. All right, now, where were we at? Code Runner, did you want to ask that question? You said I meant the basic trading view set or Wyckoff trading view setup. I'm not still not. I mean, maybe I'm just retarded, but I'm not following because are you talking about the pictures that I'm putting up there, or what? Or are you talking about like? I'm just not. I'm sorry. I'm not following. All right, we're gonna go on to the next section. Same thing here. Look at this. So this is XLC. This is the communication sector. You know,
Someone's hot micing.
yeah, I think it's Code Runner. Yeah, I got him. Thank you. All right, so this is the same deal. You know, I mean, where this does not look strong to me, unless this is going to reaccumulate and then break back up and above. But they have sell blocks here. They clearly are defending it. You have an H pattern setting up here on the 4 hour. I bet you it's an M on the 1. No, it's not. But yeah, this does not look good. You know, what's in XLC? Meta. What's Meta look like? Let's take a look at the daily on Meta. Same fucking shit. Same thing. Looks the same, right? This sell, I would love to see them bring it up to 605-ish to maybe even 610 and get everybody going long right into this supply zone. 602 even is a level up to 609 and change. and then you could take it short. I'm just not looking at this stuff and saying, man, this is so bullish, like looking really bullish here. I just don't see it unless they reclaim and can hold above. Really, they need it above 604, 605, 603 roughly, 603.50. They can reclaim that level 604-ish and start to build structure on the 1 hour and lower time frames and reaccumulate it. Then it can move back up to the higher levels. Let's take a look at Baba. This is the most ugliest chart in the whole market. Good God. This looks like reaccumulation to me on the daily. This actually looks pretty solid. Looks like there was a spring set in and that they just tested it right there. Let me think here. There's that. Yeah, it would actually have to be up here. Yeah, so I think this is actually going to break out. Look at this. This is a reaccumulation schematic on the daily, in my opinion. I think this is going to go up. Or not, I bet you it's on the 4 hour. 4 hours probably more clear. Yeah, this looks like they sprung it off this low range, little baby spring, and then they came back and tested the range. Right there. So, breaks up, comes back down, ring on the 4 hour test, and then it should shoot up. Now we'll know because you could take long-term swings on Baba, and your risk is where? A break under this block right here. If it breaks here, then it's clear that they're going to redistribute it. Very simple setup. That's $4, less than $4 of risk. So this will be a top watch for sure. Baba, these candles are just gross, but if you buy time like Mark, I think you can catch a move to 95 to 102, right? 103. I just think that's a really nice. You have the Chinese New Year coming up too. That's right. And then they have earnings before the Chinese New Year. So if they move this up before, then it's going to be a tricky trade. So if you want to get in, you want to be getting in around here. All right. Let me put that on my list, actually. It's been a tough trade unless you caught this. We caught this move up. That was a sick one. So downtrend's broken. They retested it, created a spring out of it, and then it looks like it's ready to go. Let's take a look at China. Where is it at?
So Baba looks like they sold to open some 110 puts for January 17th in the last 20 minutes of the market. Last 20 minutes before close for almost 3.2 million.
Do you want to explain what that means to everybody? Sold to open.
So essentially, it's a bullish bet because what they're doing is they're selling puts. Like they're selling puts, essentially betting that the price action will be bullish, and so they're just going to collect that premium. Make sense?
Perfect. So so I think like here's a perfect example. I think Wyckoff's schematic is actually bearish on China. I'm bullish on China. I think that it's a bullish setup. I don't think it's gonna. I think these all this tax bullshit on China. I think the fear is baked in, and because if it wasn't fearful. If it was fearful, this is really weird. What the fuck? Sorry, just give me a second here. Why is this? All right, my freaking buy sell indicator. There. Why is it doing that? Whatever. Anyways, it's just odd why it's doing that. All right, let me use this one. I don't know why that screen's fucking around. HSY or HSI. Hang on a second. Oh, it's doing it on this one too. It's not showing me volume. HSI. All right, this is fine, even though it's not extended hours, whatever. It's fine. The structure is all that matters. So look at this. Like, if this is such a bearish setup on the daily, why is it holding? Like, why are all these? Why is it holding these critical levels here after it's broken out? Like, this is in 2024, the last year at the beginning of the year. Like, this is a bullish move. It's not. I mean, yeah, it could still break down for sure, but to me, what's happening, right, on the larger time frames? Like, this is it right here. Here's a low set, another higher low, another higher low, another higher low, another higher low, and another higher low. Like, that's just basic, like, price action, right? But if this was so bearish, why are we holding and starting to curl again out of a broken out falling wedge on the daily? And it's still in an uptrend, and the EMAs have finally crossed over aggressively, came back down, and held the 200. To me, this looks really fucking good. Let's take a look at the weekly. Okay, they broke the range up here. Yeah, I don't see how this is bearish. It is pinched a little bit under the weekly, but I think this is close, man. What do you think, Bags?
Yeah, I tend to still stay bullish on it. All of them, like I've also seen like nibbling on bullish flow on Baba PDD a little more than all the other names. JD still looks honestly JD looks like it's the strongest of the bunch.
Yeah. I mean, look at this, guys. Like, they've broken it out of the range. Like, to me, this looks like this is either a UT, or it's already SOS, and it's starting to go through it's a weird range, but it's going to start to go through this range break, and then as it breaks, it's going to go. I just think it's just there. It's there. It's ready to go. And I agree with you. There's too much bullish flow too. Look at JD on the weekly, on the volume here. This is how you tell. Look at this volume. It's huge. And then what? Volume just drops off. Like, volume is down, and it's not losing key levels, holding them and holding. Now, if volume increases and sell goes up, price comes down. Well, then yeah, obviously. But I mean, right now, what this is telling us is it's bullish.
It
Look at
continues
Baba.
to hold that weekly 21, or JD does.
Same thing with Baba, right? Look at Baidu. Like, it's not. I mean, it's still sell volume, but it's not like, oh my goodness, right? It's a lot of these. Trying is tricky, but you catch the move, the first big move, man, it's going to pay big. And this is holding a huge trend line. Look at this trend line that's holding. They just hold it, tap, tap, tap. This might be a really good one to trade. Like, they could shoot this thing right back up to 108 quick. Let's see if this thing's showing anything on the smaller time frames. Hourly, underneath the trend line, really needs to reclaim it. Definitely, man, they got a lot of selling blocks above us. I don't like that.
Take a look at Billy.
Oh, Billy boy. Oh, Billy.
So they for the last the Billy $22 calls for January 17th have been getting hit for essentially since the 20, well, yeah, they got hit right from 1 o'clock on the 27th through market close. They for about 350,000 in premium. And
Interesting.
22 is the weekly 200.
Yeah, I actually like this. It actually looks better than the other ones. Let's take a look at K-Web. $4 hours. It's going to look a little different. These things move just crazy, man.
Yeah.
They could bring this thing down a little bit further, down to this area, and then actually give it a apex retest. That'd be wild, huh? If they did that this week, dropped it down to 28, that'd be a big sell on the mark on this thing, on the index. But they could do that. All right, let me go over some other shit that we have to cover. Okay, so all right, last thing I want to cover. All right, so we got on through most of the sectors. Let's quickly go through a couple other ones. XME on the daily, it's really oversold. This is starting to look constructive. If you can look at the volume, it's increasing a lot down here, and the price is not moving. You have FXI that has been getting bullish flow. So this is another setup here. That I could easily get going. I don't know where the channel is actually on this. Let's take a look at the weekly. Yeah, because as Trump gets in, metals are going to go. Oh, it's defending a gap on XME, or the volume gap down here. That's a big move if it goes down there. XLU, this is utilities, this is safety trade, holding a nice trend line actually here. You have a curl over, but this is not that bearish because it's holding trend. Defensive play. XLY, this is Amazon and Tesla. This has got room to move down a lot, actually. This thing looks like it's in the early stages of starting to come back in a little bit. All right, where's the other ones? Okay, let's take a look at NVIDIA. I'm bullish on this. So I think this thing's going to go to one. I think we got one. What was it? Did it hit here? So it hit 142 last week. And my next target for it is, because it pulled back and held this 13 and then this specific level at 136. I'm going to be looking to grab some more of the 140 calls for January 24th. I think this thing hits 144. That's my target for the next move up. 144, and then we'll see where it goes from there. So so I'm interested in that as one of my top plays. I have a marker on it and added a little bit more to that position, but this is what I'll be looking for here. Let me see here now.
TSM got hit big. Those the ones
That's
that I
right.
mentioned on flow on live ended up with like over 10 million in premium.
That's right. I wanted to pull that one up here too. And AVGO did too, I believe, right?
Yeah, Avgo as well. Not as big, but the TSM 20250 for January 10th finished with 10,327 in premium.
Dude, this thing's just a beast.
It's actually Avgo and TSM are I think are the ones right now to are going to make Nvidia type moves like when Nvidia made it. You know.
Yeah, I agree with that. That's really well said. I also think if Avgo does come down and hold 140 early in the week,
Yeah.
I think that's a place to long. 140 is a pivot that they have to hold to be able to squeeze it upside. They did get a really nice move Friday, but you have 136.46, which is a big level too. What is that low here? 136.36, yes. Or sorry, 236.36, 236. I'll throw a line there. All right, and then Google got hit with some calls. This does not look that great. However, it kind of looks like an IHS on the 4-hour. And it looks like an M. Oh, dude, this is a tricky one to play. It looks like it's curling down to compress. I would love to see a retest of this prior top at 182. Yeah, this would be a beautiful spot to long.
I actually kind of like Starbucks as well. It just reclaimed the 200 on the daily. $94 calls for February 7th were hit for 1.4 million. So I mean, really fairly
Really
simple,
nice.
right?
Wow.
Just hold that $92 level.
Look at this. Look at this. You get a perfect reversal setup, and then you get three bullish engulfing. Almost a that would have been a perfect one if they would have closed this yesterday's or Friday's candle fully up.
Yeah.
Then it's like full port long. Yeah, they're probably going to drill it right to 95, 98 to 99. When do they have earnings? Like this is the time where we really want to focus on positioning in for some of these earning runs or earning dumps. Sell off into earnings and then they rip it last minute. So the pattern for this quarter or the earnings is they like to, not this stock I'm saying, but in general, they like to sell the market a little bit into the earnings and then rip it right into it.
Another one that could be that I think could be, and it also kind of fits what you were talking about earlier, is X. X on the weekly just closed above the 200. They
Dude, this is beautiful. I love these setups. Inverted doji, bullish engulfer, comes back up, retests the bottom of the supply here at 30.90 roughly, and it holds with another reversal. So I like this move for sure.
The $35 calls for January 3rd were hit for 370,000
for January 3rd.
For January 3rd.
I mean, that's pennies on the dollar, bro.
Yeah. So
Those
the
are pennies.
34s got hit for 157. But yeah, no, I like that 35. I like the $35 calls. And again, another one that's simple. Basically, $30.60 holds. You're good. If it breaks, you cut. But it should, at a minimum, I think, um, test the daily or the weekly 8, which is about 30. It is about 34.83 ish.
Look at the weekly here.
Yeah, that's what I'm looking at.
This is really nice. If you honestly, this might be a good spot to take, February,
Like 40s.
February 40s for a
Mhm.
retest of this supply here. And then, that reason why I say that is because you have Trump coming in and they have earnings just after Trump. If
Yep.
Trump, says, hey, da da
He
da
wants
da, or
to
whatever,
block
it's going to
that
be bullish.
sale.
And if you're in cheap $40 calls, we're thinking, ahead of the market here, right? For $40 calls for January or for February, and then it gets a move up here, chops around into earnings. It could gap on guidance, right?
Yeah.
So I like that Feb 40s.
It's almost like buying the bottom too. Like the play is really going to be is, for argument's sake, your account allows you to buy $1,000 worth, right? And you basically take $1,000 worth of those and um right as it's testing that area, the 35 $36 area, you take off 75% right before earnings. 75, and hopefully that means you've taken off all your risk, locked in a nice little amount of profit, and then the rest can go free if it goes parabolic. Because if it does guide up, I mean, it can. It can go to 44 in the $44-$45 area.
Yeah, easily. Plus, it's holding the weekly here,
Yeah.
the weekly 200. Beautiful spot to long. This was a great trade we took last week. It was a beautiful setup. I think, buying time on this is going to pay big. This was, if you look at this structurally, all they did was they shot it up, came back and retested the previous supply zone. For fucking basic, right? So I think this thing is another one that we're got to keep an eye on for sure. Let's take a look at GME. Fuck this. This is just. I think you just got to go April $50 calls and then just forget about it. Like I think everybody's gonna get smoked on Jan. We caught the nice move. It wasn't even that big of a deal. It's just like shit, This is nobody's talking about this stock, and it fucking blows my mind. Nobody is talking about this stock. We literally bottom ticked this on the May calls. We got them at 35 cents. They're trading at almost $1 for May, you guys. So this stock can keep going, or it's going to come back in and chop. I personally would like it to come back in and chop. Call me crazy, but as long as that volume stays on those chains, I would love it to come back in next week on Monday or Tuesday or Wednesday, whatever, retest 315, and then I will absolutely load the boat on those May 5s again. I'm in them, but I want to load. Because this thing looks ready to go. As long as they keep that money sitting there and this buy volume, look at that. Huge buy volume coming in here. Nobody's talking about it. Nobody. It's great. Love it when nobody talks about your stock and you're in, and then they start talking about it. And then everybody's like, oh, yeah, I was in. No, we were in first. Most likely. All right. So then QS. Another thing, we nailed this sucker right off $5. Here's another one that coming back in to test this area right in here. Really nice hold of the daily 200. I like QS, $15 or $10 or $15 calls for June. for June, like long-term swing. 15 or 10. I don't like, or even February $9 calls. Like my first target is $9 on this. I think it's going to hit 9 pretty fairly quick. I think it's going to get a nice move in. It's got earnings in February. You could take, the February $10 calls. If it's 9, scale some off. Or you could do the $8 calls. So I like QS too. All right, then what's the other ones that we're looking at? MU, I want to see this again. So this thing is just hanging out. OG tore this one up Friday or Saturday, or Friday or Thursday. All right, so interesting setup here. It's in a flag. And it's looking pretty constructive actually. So if they bring it down, I wouldn't mind taking some longer stuff. Now the EMAs are really too steep for me to see this thing go up like that really fast. So I think if you do want to play it, you got to buy a lot of time. Because I think they're just going to reaccumulate this down here and then maybe move it up and out. But your risk is really well defined. They cannot break this line here at $84. 84, yeah, roughly 83.64. They can't break it. If they do, it's going to get a really big move to the downside. I like LRCX a lot. I think this thing will be, by earnings, I think it's going to be filling this gap up here into the 105 range. Not by, after earnings, most likely. Yeah, exactly. Don't let a green trade go red. Absolutely. All right, now let's cover some of the miners. Ben, probably one of the hardest trades in the whole market is the miners. Okay, this is sitting on a big spot. CLSK, once again, sitting on a big spot. We traded it off this trend line and it paid really well, 76%, 75% in about 10 minutes on a 2-week out trade, like a few weeks ago. So I do like this. I think it's setting up. However, I want to be really careful because this thing if this breaks down here, it's going to flush pretty hard. Mara. And so with CLSK, they keep adding and adding and adding to the $37 calls for July. They keep adding. The open interest has gone from 90,000 on those calls to over 125,000 now in 2.5 weeks. They also just slammed the 15s for that same expiry. Let's take a look quickly at the daily volume. You see how the daily volume is starting to decline aggressively, right? Look at Mara, same thing setting up. Look at the daily volume, right? This volume's dying really, really fast. What does that mean? It means that sellers are kind of getting to the point where they're not really wanting to sell anymore. Buyers are stepping in and the sellers are being exhausted. But the thing is there's not a lot of buyers sitting here like, hey, let me get in, right? So we want to see a little more buying pressure come in. So they could continue to move this thing down to, this is a pretty big spot down here. It is. They broke it under the trend here. Get this out of here. Yeah, this is going to be interesting, really interesting. You got a lot of shit going on here. Yeah, it could come down here and test this level. I think that's a good bounce spot to buy the dip for a nice little trade, 50% or something. Catch it, bounce it up, sell it, and then wait till it gets a little more structure and strength. I think that they're going to let these things go and catch everybody off guard. And it's just going to be like, what the hell happened to the miners? They were just getting smoked, and all of a sudden they're ripping. So here's Riot. Still looks good. It's just trading in this box right here, between 1050 roughly, call it 1066 to that upper range between 10 or 1478. This is a good spot for me. I've been seeing the $20 calls for June get just loaded. I mean, there's over 77,000 open interest on them. And, you might be thinking, well, you know what, those things aren't going to pay anything. Or, might be thinking, these things aren't worth shit. They're not going to do anything. Bitcoin's dumping. Well, it doesn't take long for, what they could do this too. They could keep Bitcoin down or chop it around and then rip the miners right out from under everybody. Because people would be like, well, Bitcoin's not going, I'm not buying the miners. Right. And then a lot of people would miss the move. Right. You have a gap. If they break this low down here at 984, if they get down there, I'm going to start scaling in pretty aggressively, right? Yeah, I just think there's a really good risk to reward on these miners. The pattern has a history of really hard breakouts and fast breakouts. When they coil up, they break up, coil up, and then take another leg. Look at it back here, 2023. Coil up, break out, coil up, break out, came back in the same range that we're in here. And then it made a big fast move. Look at this. It set a low. It broke the range low. See, this is what I'm talking about. See, we're here, we're in a range. Look what it did. It was in the range and then boom, broke down and then fucking ripped. So it went from not $10 to $20 in a course of from June 20th to July 13th, 3 weeks. It moved $10. If this moves $10, same here, it's going to go straight up to there. I think actually the next target is the 23 level if this breaks. So first spot would be 18, then probably shoot up, reject, come back down, and then go up to 23, then come down. So I think looking at the history, look what it did here. It came back up, shot back up into that range. Zoom in a little. It has a pattern of this. Shoots up, flags, boosts up, flags, and then it comes back in, it chops, and then it gets really aggressive. So if this thing does break and hold this 24 level, call it 23 and change, this thing's going to be a fast mover right to the top of the supply up into the 40. And that's the thing is you're thinking, well, I don't know, that's a big move, $30. Really? So look at the history of these things and how they move. Here 27 to 46. Here, just this little move, 13 to 24. Here, look at this move, 21 to 77 in a matter of days, a couple of weeks. The risk to reward here based on what you're seeing getting hammered on this flow. It's why are these guys putting all this money time after time as the thing's going down? Probably because they know this thing is gonna be higher. I think so. Plus, on the weekly time frame, this schematic looks really bullish to me. I think it's at LPS on this time frame, and it's probably going to spring down a little bit. It could come down, maybe liquidity grab, and then that's when you want to get it. That's really when you want to get it. We'll put a little spot right there. Right there, 950. If it hits 950, I'm loading heavy on those Junes. And I'll probably stagger calls out through March too. So obviously you get the alerts and stuff, but that's what I'm looking at. And then I'm going to draw a trend line here across. This is the compression. Yeah. Oh, yeah. I had that on my list too. Rivian. Yes. I love Rivian. This is one I would mind taking on Monday
Yeah.
for a cheap
Long
swing.
term has to be though, because I did see
Yes.
some big $14 puts for February. Um,
Ooh,
yeah,
that's an ugly weekly too. Yuck.
yeah. But so with the way that I would
No
want to
way.
play this would basically be I'd like I want to watch, but the 8 just crossed over the 21 on the weekly. I could see like a nice flush back down to the 21, which is about 1236, which is where I think is the load spot, you know?
Yeah, I could see
So,
that. So I have a level on the weekly here at 1280.
mhm.
That looks like a good potential spot. And then you said 1236.
Yeah, I have
That's
1236
another,
to 21. Yeah. So they they
it looks
they
good.
smacked the $14 puts for February. I mean, they hit it for 1.2 million.
So they'll compress it down. So
Yeah.
we'll just wait.
Yeah, and this is a play. Like these contracts are cheap and they move pretty well, so it's like you can always just play the price action. But I really I'm looking at this in the long term. I honestly believe that this is going to be testing $25 in the near future, in
Yeah.
3 to 6 months, basically.
Yeah. June, $20 calls would be dirt, you know?
Yep.
Or you could take Leap $30 calls and they're going to be pennies, and then you can just let them be and don't even think about them.
Yep, just keep adding dips, and you take a little bit, and then you just add dips, because I do think that there's a good shot that that we get a push back down, and because it's got a hidden trend line, which so far it's holding, right, if you look at the daily. But I do think that it could flush down to the 12, anywhere between that 30 something level to that $13 level that you mentioned, or 1286. But
Yeah, 1286 is going to be a big spot they're going to want to hold.
yeah,
And then under that, then it goes to 1236. So you could scale in off those levels.
but that's I think that this is a swing. Like I do think that this thing, $25 would be my target, basically. I mean, just scale out. Look at that weekly. Look at those. I think that it if it breaks that once it breaks that top trend line, that $25 comes fast.
I agree. One thing I do want to talk about. So is there any other tickers you want to bring up, Bag?
No, I mean, I still watch Sound, RGTI, QBTS. It's still the theme, right? Like I did see some big puts on Sound. So right now, I would not long Sound. I think Sound is going to see $30 plus soon as well. But I do think it needs a cool down. I saw I see a bearish diversion on the daily, and I also saw 954,000 in puts for January 3rd, for the $23 put. So like my thought process, guys. Like I love it, and these are RGTI is another one. That's the theme, right? Like I do think that right now these are some hot tickers. So the way I think the way to play these is going to be um like if you wanted to play Sound, I would play one third to half of normal size position to the downside. Don't get squoze. You know what I'm saying? like
Just
these
be
are
careful.
right.
Be in and out.
Be in and out, take profits and all that, and then just watch major spots on the larger time frames, 1 hour, 4 hour, daily, to figure out where you wanna long, because again, to me, our sound RGTI B17 Like I saw some pretty nice call flow on it still. So those are just tickers that I kind of watch. Same thing with QBTS, right? Like I had the Lunar's another one that's still kind of moving. So I mean, we're seeing some rotation into some mid and small caps, right? So let's we watch, we look for flow, and just kind of, like I had those QBTS 8.5, so like 30 something cents on Thursday. Sold them for 100%, and I don't know, the underlying hit
They
like
won like
$11.
7,000.
Yeah, the underlying was hit like $11 and change or something like that. Yeah.
But the daily's got a reversal setup, right?
Right. Yeah. So that's why I'm not looking
So does
to the
sound.
upside right now. Yep.
Sound is reversal setup too. So does an RGTI. Like same thing. Like like for everybody trying to play the theme, this is the deal that I want to talk about. Themes are great and they're awesome if you catch near bottom or ride scalp off good risk levels from lows. But when the crowd gets traded and everybody starts to get into it, like right now, this quantum theme, everyone's fucking on it. Everyone is on it.
Yep.
That's when you really want to be really fucking careful. And if you're trying to trade long, like we did not catch a lot of these at all. Got like maybe one or two or three or four of them, right? But you don't see me chasing that shit because I know how dangerous it is. I'd rather, because I mean, look, we make 100 to 500% trades every day intraday on SPX. So there's zero reason for anybody to sit there and try to, chase shit. If you get a good entry, you draw your trend line, you see the alert, you find your risk level, you get in, make your money, do not be greedy. Take your money. This is about, so 2025 is about building your account. It's not about, predicting this and that. Yeah, we have Wyckoff schematics and things like that when we're looking on things. But however, even though you see a schematic, right, from Vince or, me or whoever, that's not a bias because we have other schematics. And I talk to him all the time and I'm like, hey, look, what's your bullish thesis? I'm looking for upside here. And he'll look at it. And like the other day, he's like, dude, amazing call, because he was looking bearish. I said, no. We got to make sure that we're not going to get caught on the wrong side of a trade. I think that this could be a bullish setup. And then what happened? We squeezed up really hard. So we want to stay neutral on all fronts. Okay. Right. And the big thing is understanding where's your risk. When you get a ticker, right? And you're like, oh, I'm going to get this. Okay. Netflix call, or let's just say, Netflix calls. Okay. And I'm like, Netflix calls, and let me pull this up. And it's weekly calls. Perfect example. You pull up the ticker. What do? The first thing you do, okay, you look left. Okay, you pull up the 1 hour, right? You look left. Excuse me for all this other crap in here. And then what you do is you look. Hold on a second. Hold on. I got an interruption here.
Yeah, Lunar was another one that I was mentioning last week. I had the $16 calls like at like, I don't know, 70 cents, 60 cents, and I had the 16.5s at 45 cents. Papered the fuck out of those. They, the underlying hit almost $20. But like these are, Lunar to me still looks pretty good. I guess,
All right,
let me
let's
know
do
when
this.
you're back.
Let's do this. Like, for example, you get an alert. Boom. Lunar calls. What do? You pull up the chart. Okay. First thing you do, you pull up the chart, you pull up the hourly, you say, okay, where's my risk? Oh shit, there's no trend lines up here. Oh, or there's no levels, right? And then you're like, okay, well, what do we have above us? Okay, well, we have support turning into resistance right here. So we're going to take a trend line, and this is when you get the alert. You draw the trend line. If the risk is not defined in the trade, right, then you draw the trend line on the hourly. If you don't know how to draw trend lines, ask. Okay, there's the support level. Okay, and then we have a trend line. Anchor low. Here's the trend. Okay, here's another tap, tap, tap. I would be interested in taking lunar calls around this trend line. If it breaks this trend line, I would be looking for support right here. This is a big spot. Okay, actually, let me do like this. Right off that wick. There's the next spot, right? So these are the areas, just quickly. Then you're like, okay, all right, I'm not in the calls, so I don't need to FOMO, right? So FOMO, how many people in here FOMO every week? Or have been in a room where they like get the alert and they're, oh my God, I got to get in. And then all of a sudden they're fucking down. Right? Well, fucking everybody does.
Everybody does
right?
this.
Yeah. So FOMO is as a negative reaction. Okay. We're going to talk about mentality coming into 2025. FOMO is a negative reaction in your body. It's not positive at all. Okay. It's a fear of missing out, right? So that chemical reaction that happens in your body when you see an alert and you feel like you have got to get in instantaneously is negative. That's not going to be a positive reaction in your body. So why is that important to know? Because as a trader, you have to have patience. Patience is a positive reaction, a positive virtue in the market. The reason why it's important to understand that we do not want to FOMO. What could you do? The alert comes through, $20 calls next week, lunar. Okay, you draw your trend lines and you're like, all right, it came down to here. I like this. What do? You buy one. Buy one. We call it a marker in here. We call it a marker. Then what are you doing with that marker? The alert comes through, it comes down, and then it chops. And now your premiums go down, because it's chopping, right? Because maybe $2 million hit the tape, and those $2 million are down 20%. Now they're down 30%, right? And then it comes down, it breaks this level, but it starts to hold. And then maybe it wicks down here. You're like, oh, I don't mind this. Now you grab 3. Now you take your average, you sized it down, you have more contracts, and then it pops up, reclaims, and breaks out. That's how you should take an alert.
And one thing to add about, you have to be able to differentiate. These are shit companies, right? These are shitcos. Lunar, RGTI, QBTS, Sound. All these are real. Are totally. They're 100% shitcos, right? And it's just following the theme. So the way that you have to play these, you have to. Rule number 1 is always protect capital, right? So if your normal sizing is $1,000, guys, it's okay to do like Sells is saying, right? You can
100.
size down on these. They'll give you a move enough, and you can still make good money, but still only put on a certain amount of risk, right? Like the other day, I mentioned Sound on Voice, and they went 1,800%, I think, in Nismo Cot, right? And I don't always alert these, and I don't. I trade a lot of shit like this that's getting volume, that's getting premium, and that's getting but you won't see me actually alert, right? The reason being is going to be these are high risk. Okay, so I play them, and now mind you, you will see me type stuff in the main chat, like Lunar, all of them, Lunar, QBTS, and RGTI. I typed it in the chat and just kind of showed you on the hourly. Okay, I'm adding here. I'm taking some here. But when there's shit companies like that are really, it's just a theme. You gotta size appropriately. You don't size for 0. You still respect but you give yourself. But if your normal size is $1,000, it's okay to get in with 300 to 400, right? Give yourself a little bit of a wider stop, because they're gonna be violent moves on them, right? But like, as long as the larger time frames And then if it's a flow thing, like if that I mentioned the flow, like because I got into them a lot of it because of flow, and then I started watching on the time frames. I went red on a handful of them and added, but I do the same thing on these. I don't size full size. So that's kind of the way to play things like that, because again, the move to the upside on these, I mean, shit. I got in on Lunar was like $14 and change when I got in and mentioned, right. So there were weeklies that I was in, and it hit almost $20. So I papered them like I only got 130% or 140% on my 16s, and then I ended up getting like 10% or something like that on my 16 and a halves. Some shit like that, just because it hit a resistance level, it looked like it was going down, so I just cut. It's like it is what it is. But you guys understand? Is that making sense? Like when it's shit like this, mid caps, small caps, you got to be careful because they can drop an offering on you overnight.
Yeah, exactly. That's a good point.
So it's like you cannot size up. You cannot hold full. Like it's got to be you. You follow the number one rule that we have in the room, which is basically respect capital.
And protect it. To add to this is, if a trade is chopping around and you're down 20% on your first entry or even one contract, and you have a smaller account, just cut it. It's you don't need me, you should never need me to tell you, or anybody to tell you, to get the hell out of a trade if a trade's not working, right? Because think about it, like if you're in a trade and it's just going sideways, it's just better just to cut the damn thing and wait until something better sets up, because then you can deploy that capital into that trade instead of just waiting for something to go. Like it's there's nothing wrong with being in a trade and then all of a sudden cutting it a minute or 2, 3, 4 minutes later because it breaks down. Like there's nothing wrong with it. There's this huge like like everybody looks down upon cutting a trade. I think it's the stupidest thing ever. I don't know why people do that, but I think that, yeah, obviously we want to have the most highest quality and the least amount of stop outs possible, and the highest percentage of return. Absolutely. But at the end of the day, there is nobody that's perfect. But if you take 10 trades and you stop out of 30% of them or 40% of them, right? And you stop out at 5%, 10%, or even 20%, right? Because think about it. If you get into this lunar trade right here, you're like, and you say, if it breaks this line in this level, I'm out. You lose 5%. And then it comes down here, builds structure. You're like, all right, I'll add. Well, you didn't have to draw down all the way to 25% on that entry, right? Like, so you can now buy twice the amount of contracts for the same price here, down here. That's a lot better thing. And then instead of something happening where it breaks down, you're like, oh, I hope it reclaims. Oh, I hope it goes back up. Oh, shoot, it's going down. Oh, oh shit, I'm down 50%. What do I do?
Yeah, and the thing is, if you entered at that trend line and you hold to that next level, and you're in weeklies, that's not 20%. That's a 50% drawdown, 60% drawdown on things like this.
Yeah.
So that's why you trade like you trade these very differently, and that's why the sizing is important. It's like you gotta be. I mean, yeah, but think about it. If you had $200 in them, for argument's sake, in the 16 and a half calls at like 30 something cents, right? In that, and then you were able to trade, you're able to take off half of your position by the end of the day, where you really, or three quarters of your position, And so you left essentially $100 worth of capital, but you took off all your risk, even locked the 25, let's just say 25 or 30% of your total cash investment. That's a good return, right? And then the next day it gaps up and it goes to like it did, right? It went from the 14 and change to like 1962 on the underlying. That $100 position that you left, you followed your rules, you protected your capital, because how many times are you up on shit like this? You can, if you hold full, you could be up 60%, and then the next day be down 60%. You
Yeah, and
can't
that's the thing
do
is,
that.
yeah, you don't want to do that because you're like the risk, even if you have say $500, the you're risking a bad mentality coming into the day. You're like, shit, I'm down. And then what do you think? Oh, well, I need to make that money back. That's the wrong mentality. Like instead of cutting it, and then waiting for a setup. Like there's hundreds and hundreds of thousands of tickers in the market. You don't need to hold everything. Some of the best trades that we make in here are day trades, like really good day trades. And we just don't need to put that risk out there. So the last thing I want to talk about is, do you have anything else you want to cover on that side of it?
No, go ahead.
Okay. Is, for coming into 2025, it's really important to make sure you set the tone right. Set the tone right. And I'd rather see people be stopping out at 10%, 5-10%, maximum 15, than holding down even 20. And if it ever hits 20, even on the first scale and you have a small account, you should be out of the trade. You should be out. Let's just try to manage the risk, okay? Because it is hard to, make no, I will say this. If you are in an SPX trade, a 0DTE, that's a different ball game, okay? A way different ball game. Now, in an SPX trade, we define our risk within points, okay? So let's take a look at SPX in general, okay? So what you'll hear me say is this, all right, so here's the 6,000 level right there. So I'll say the market comes down, it pushes up. Okay, I like puts here with a risk of a close over 6,000. So meaning if it pops up and breaks above it and holds above 6,000, right? Then you get out. You could do it on the 3-minute. You could do it on the 1 minute. Even say, okay, if it breaks and holds above it on the 1 minute and closes a 1 minute candle above it, I'll get out, right? But let's take a look at the 5. Here you can see so that we did not chase this first move down at all. We sat there and waited 5, 10, 15, almost 15 minutes, and then I said, okay, this is actually not a bad spot to long, but let's take puts off of 6,000 rejection instead of, hold on a second. My thing just went out. I just gotta, give me 1 sec. So the rejection of 6,000 was a great spot to take puts because, well, we have, first of all, that's a huge gamma level, and they don't just break it down and keep flushing it off of a massive gamma pull like that. They're going to try to bait people chasing the hole. So we took it, and when you see that, that's your risk right there. Now, let's say, for example, you missed it, right? And it starts to go down. Where are you defining that risk? It's got to be this previous candle here at just under 6,000, right? And let's say you missed that and you catch this candle here at 93. Yeah, thanks, PK. Now your risk is going to probably be right above this hold of 95, right? A little bit above it, maybe to 96, whatever, 96, call it this wick right here. Now you want to define your SPX trades, and I'll do that, and I think V does that too. I'm not sure if Vince does it, but I always do that. I'm pretty sure he does. Yeah, he does. He does. He'll throw out risk levels, but when I'm intraday trading SPX, like for example, this day I said I love taking puts off of 70. This happened Friday. I typed it in chat, said, hey, everyone, take puts here off 70, risking, close over 72 on the 5 minute. Boom, they fucking printed heavy right here, flush down. Right here, flush down. And this is a perfect structural spot to take a short off of. You can see here, right? That's a good spot. Look at that, right there, perfect. Now, getting back to 2025, define your risk. Always define your risk. Understand the instrument you're trading. If you're trading SPX, you better damn well get a good entry. And if you don't, it's okay. There's another trade coming. Or size down and get in. But if it's extended on the 5 minute, right, and the price is overextended down away, do not get puts. Wait till it shoots up into structure or into some place where you can take risk off, or take it off of and define your risk. That is huge. Okay. Then secondly, who are you trying to become as a trader in 2025? Does everybody know their style? Does everybody know like what kind of trader they're becoming, right? So I know RS knows. I know Only Bags knows the kind of style he is. I know Dog Mom, Clayster, Cream, B17 Don. I know a lot of these OGs, Queen ZP, Sage even, Venkat. Like, you guys are building your styles as a trader. How do you know your style? Well, what trades are you most successful with? Is it the EMA strategy, and EMA and compressions, or is it strictly trading off of Wyckoff, or is it a confluence of Wyckoff, EMAs, and trend lines, fake breakdowns? Maybe you just trade the trend lines and you capture, you trade the failed retest, right? The breakdown, the retest, and you just trade that, and that's all you do. And you just rinse it up for 100% trades all the time. And your risk is so clearly defined, you don't fuck around with anything else. You can make a great living, a really great living, just trading the trend line strat. Like, awesome. I mean, Bags, how big are the reactions we get from these algo lines? It's nuts.
They're massive. And one of the things that when I trade SPX, one of the things I learned, or one of the ways that I like to trade SPX, and I learned that after a few months of getting wrecked, honestly, and trading it, I like to take the trade on opposite candles.
Yes.
So what that means, right, is like, if your thesis is bearish, right, then you're taking it at a level in the chart, whether it's a trend line, an EMA, or anything like that, on a green candle. And that's the psyche. That's what's hard, right? Like, because you see green, you have to get comfortable with taking it in a scary spot. Follow your thesis. If you're wrong, you cut. Keep it super simple.
And also,
You cut out, by the way. You might have muted those.
sorry. That is the game. Is if you're going to trade SPX and be a big dog,
when I started doing that strat, guys, like I saw a massive difference, because when I used to do it like the other way, right, or whatever, like I would get red like instantly, right? And when I started doing where if I'm gonna go short, I'm taking it on a green candle, my entry was almost instantaneously green. Like, so
Always.
20-30%, like immediately, right? So that's kind of the thing to do, right? And look, a cheat code too, especially trading SPX, guys. I still do this, right? Let's just for argument's sake, I took 3 contracts on SPX. I get into if I entered on with that strat immediately, like at my entry, I immediately put a limit sell on my ladder, like just slightly over 100% on my first contract. You will be surprised how many times that shit fills because of the volatility.
Yep. And the thing is what he's saying is gold. Every good SPX trader does this. We all do it. It's you have to when you feel really uncomfortable because price is shooting up here, like on the chart here, into an area that we've defined as a good spot to take shorts off of. That's uncomfortable. Because a lot of times price will try to bait people going long, it'll chop there, and then all of a sudden, boom, it gives you the move. And when you feel that uncomfortableness, that's when you grab one contract, and then you watch the premiums, and then maybe you grab another one. You wait and watch the premiums, and you got another, and then you get the move. Or maybe you grab one, and then you get the move. You grab one contract on this move here that I called out in chat right there. You're up 200% or 150% so fast. Like instantly, you just get out. And that's another thing, like trades, like the best trades are the quickest trades. Like I'm telling you, like unless we're in a swing or an intraday trend day, which trend days happen, I think 20% of the time in the market. So if you have, so most of the time you want to be in quick trades. If you're intraday trading, get in, make your 50, 100%, 200, 300%, get out, boom, out, done. Don't sit there and hold and hold and hold and be like up 100% and then watch the fucking thing go red. Like, no.
Yep. And the
Do
other thing
not
is, if you're trading 0 DT SPX and you are, your style is you're gonna scale in. You scaled in on your first, and you get that entry again on the scary candle, and then you see 70-80%. Take it. It's okay.
Yeah, it's a
Like,
great trade.
it's an awesome trade, and like because and especially when you're a smaller account, because chances are if your first scale is just the one contract, that means you're a smaller account, right? Like like my scales are usually a handful of contracts on my first scale, right? Like, so it's like and guys, I don't trade a massive account. So it's like I'll do 2-3 sometimes only on my first scale, but I take if I see it, I take it, and it's like
Yeah.
well, you got to get used to that because you're trading
If you
zeros.
keep taking profit and building that habit of taking profit, you're going to be successful. You're just going to be. And if you get in the habit of as soon as the trade starts to break down and break a specific spot, like for example, if you got inputs here and it shoots up here and holds and structure's changing and it's starting to hold this level, then you can get out. And then if it breaks down and then a retest comes in, you can get back in here again. It's huge. You gotta compound your gains. It's the only way you're gonna grow. And for small accounts, you should just be day trading stuff and longer term stuff. I don't know if it's really the best thing. Yeah, trade QQQ, SPY, SPX, whatever your flavor is. SPX is a different animal. So the last thing I want to cover is mentality, right? So I really want to make sure you guys are looking at things to, yeah, exactly. Perfect. Well said, Dog Mom. Exactly. Is, coming into 2025, what do you want to do? Like, I think if you're going to set goals and things for yourself, which is perfectly fine, I think the best thing to do would be to build your goal setting based on process oriented thinking, less outcome. Instead of thinking about money, how much I want to make, how much I want to, this, I would be thinking about, I want to have no bias every day I enter the market. That's a goal. I want to um, make daily choices where I can define my risk clearly as possible, as tight as possible. That's a great goal for 2025. Every day, right? Like those executing those two will translate into more money. I want to withdraw money Friday. That's a good goal. Pull out some of your gains every single Friday. I want to be 100% honest with myself at the end of every day and have 100% accountability so that I can grow. Lying to yourself, saying I'm a great trader when you're not, is not good. That's not how you're going to get better, right? And if you have any questions, you need any help, you would just ask. We're here to help you. And you got to think in terms of, I'm here to try to reprogram myself into a sniper. A sniper does not think about, oh, I'm going to get a purple heart if I shoot this guy because I'm going to save this guy. I'm going to get a purple heart. I'm going to shoot him. No. They think about, I got to kill the target and I got to protect my men, period. I got to kill the target. Okay. How far away are they? Okay. What's the altitude? What's the distance? Let me get the scope right. Let me get my breathing right. That's process oriented thinking. And they execute it and the purple heart comes, right? It's the same way in all this stuff. Don't think about the money. Think about the process. Think about staying calm. What's your process? Pull up the hourly chart. Define your risk. Find your levels. Find your trend line. Okay, now do I want to grab one contract as a marker to see how it behaves? Okay, great. All right. Okay, they called out SPX at 59.95 and our risk is 6,000. Okay, great. I'll grab one as a marker. If it pushes up to 6,000, I'll grab one more SPX. If it doesn't, I'll just ride it. And then I'll start to take my gains when I feel like it's overextended on the 5 minute into and then what I'll do is I'll look to get back in as the 5 minute pops back up into the 13 or the 21 on a downtrend. I'll get more puts there. That's my strategy. Boom. That's thinking process. That's building a habit. That's process oriented instead of, oh my God, I'm up fucking $1,000. Great. Oh my God. Oh my God. Oh, now I'm up 500. Oh, I better hold. That's emotional, reactive thinking. That's negative outcomes coming. That's like it's like a roller coaster. Just think if you trade like that every fucking day, like my God, it's so stressful. It's got to be.
I'd like to ask everybody that's listening right now, and please respond in the chat. Like, honestly, tell us, how often do you take a trade, whether it's your own trade, something that we've called out or alerted, and once you've hit that button to buy, I mean, how often are you entering with a plan? Like, what am I going to do if it goes against me? Where am I going to scale out? I mean, and honestly, answer that, because the reality is the more you get used to formulating a plan on your own, right? And look, and stuff that we call out a lot of the time, we're going to try and help guide you, right? But like at the same
Yeah.
time, we do a gazillion other things at once, right? But
We're watching
you
Trader
automatically,
Link, we're watching Flow, we're
yeah,
watching other setups in the
yep.
chat, and then typing stuff out in there. Yeah,
Yeah. So once you start getting used to that, as soon as you have hit that buy button and you have formulated a plan on your own, and you start executing the plan, and with experience, that your plans are going to get better. And but just the simplicity of formulating a plan and following it, you're going to start to see that the P&L is going to keep moving to the right. And yes,
and yeah.
there's going to be instances, right, that you're going to leave a lot of money on the table, that you're going to, but as long as you're protecting that capital and you're following your plan, you're winning.
You have to realize you will always be leaving money on the table. If you play this game, you will always, I don't care how great you are, how big you are, you will always leave money on the table. Every fucking time. It does. Nobody's perfect. You're just trying to catch the move, catch a meat of a move, get in, get out. I mean, think about this. If you got a $2,000 account and you trade with $300, right? You get in, you make 30%, boom, out. Next trade, you get in, you make 100%, boom, you get out. Next trade, you get in, you stop out for 10%. Next trade, you get in, you stop out for 20%. Next trade, you get in, boom, you make 70%, you're out. Like you're in, out, in, out. Lock in the gains, compound the capital. Another good thing would be like, hey, I'm only going to take 3 trades per day. And once I hit my 3 trade limit, I'm done. Now, if I make, say, X amount of money, I can play an end of the day EOD MOC lotto on SPX with a tiny portion of those gains to juice them if the setup looks good and we get a call out live. A lot of times we'll walk trades through. We've hit 700-800 percenters at the end of the day from a really nice setup that we can see happening and building up. So we can I can see I know how charm works on the underlying in the market, so I can understand suppression and compression from gammas. So we can read that stuff pretty well. And from another side of it, from mentality, I've said this a lot, and I'll say it again, is just stop caring how long or how much time, a time limit you have. Just submit yourself to the process of learning and growing and taking your time. And every choice you make in life and in the market is going to reflect how you feel. And our emotions should have no bearing at all on how we navigate through the market. Okay, our emotions should just be floating, right? And just there. And you're just executing based on facts. You're an observer. The market is giving to you, and you take what you can, okay? And you're looking for a setup, and you know what you're looking for because we're teaching everybody as well, right? Okay, because we give you a setup, we give you the trade, and then I like this trade because they alerted it number 1, and we got the risk, and he said he likes Tesla calls off 430 because that's a big level. So my stop out will be under 429, and I think the target he said was 440. I think that can hit there, and then that's what we're gonna do, and I'm gonna get in those calls. And there's your setup. It's very clear. The picture is so freaking clear. I'm in. And then it goes to 440 and you're out. And it's that simple. So you want to wait to take the trade and make sure the trade is so dumb clear that it's that easy. And if you miss it, it's okay because there's a million other trades that are coming and going to hit the tape. Okay. And the mindset shift to process, to build, you want to reprogram to build satisfaction from doing what you needed to do and stop caring about how trading is affecting your life. I'll say it one more time. You want to reprogram to build satisfaction from doing what you need to do, meaning having a plan, having risk, having your setup, okay? And not caring about how it's going to change your life. This is a big shift. You need to care about how much you're willing to lose on a trade and where you're going to find your risk. Focus on the version of yourself that is a profitable trader and not trying to romanticize in your head about being a profitable trader. That's really important, like mental shift, right? You focus on the version of yourself that is a profitable trader and do not romanticize about being a profitable trader. Does everybody understand that?
And if you guys are having difficulties being able to formulate a plan for yourself, reach out. You know, I'd be happy to sit with you, for a 30-minute call or whatever, and just kind of help at least structure, help you understand what you should be looking for, right? Number one. And then number two, like even within the trade, ask with, in chat, ask, yeah, and we're going to do our best, right? At the time, but at the same time, define your risk before you enter the trade. We make it simple, right? 20% hard stop. You see that. I don't use hard stops. But like when I see I'm minus 20%, and usually, and if a candle structure has, is starting to look like it's going against my thesis, then yeah, I'll cut. So what ends up happening? I'll sometimes end up cutting for minus 30% or minus 25%, something in that realm, right? Um, it's just the way that I trade. But also, I don't I don't trade a larger size because I'm usually only always in weeklies and zero DTEs, so I don't need as large of a move, and I can make large gains. Obviously, as you see it on a daily basis, right? Like that we hit multiple um you know multiple times a day, more than 100% trades. But ask, like, things like this, you guys, this is your time. Like, we don't know what we don't know, right? So, every single one of you is going to be at a different level.
Yeah, and also, if you guys having success doing just day trading, don't fucking swing trade. Don't take any of the swings. If you're having success being a swing trader and taking 20, 30%, then do a swing trade. If you have a problem not swinging and holding when you catch a move and you catch a bottom, then set up a separate account within your brokerage and put that as a swing trade account and then have the day trade account. Right, but still manage the risk. If you know what, like this market is in a tricky spot. Everybody knows it. If you're overly bullish or overly bearish, that's gonna screw. It could screw you fast. I mean, you don't need to do that. I mean, look at this setup. Retest is failing, reversal setup, but they could rip this thing to the fucking moon. All the point is just, who do you want to be? Do you want to be a day trader? Do you want to be both, swing and day trader? What is your strengths? What are your weaknesses? What do you need to work on? How is your thinking? If you're going through some emotional things in your life, maybe you back off on trading for a little bit. Maybe you only take small size until that stuff kind of gets settled in, right? So
The other thing is got to be is like what you're gonna realize and understand is that every single person is gonna have a different risk threshold risk. So you have to figure out the only way to be successful is understanding the style that you are comfortable. Like you have to be, because if you see, like, even if it's not a lot of money, right? Like, for argument's sake, you got a $5,000 account and you're in a $300 position, and you see that you're down, $50, and then you start to get nervous, right? Like, then maybe short term is not really you have to take time. You have to, you can still, like, if for argument's sake we call a play that we are seeing as a zero DTE, but you're new to it, there's no problem, no shame in like taking one or two DTE in it, right? And just, same sort of size, based on your account, and just only if a zero goes 100%, a one DTE is going to give you 20-25%, right? And that's okay. Get comfortable. Get comfortable first, because if you're uncomfortable, it's going to cloud your ability to perform.
yep, exactly. Well said. All right, guys. If you have any questions, reach out, rest up the rest of the day, watch some football, chill out, and we're gonna have a great week. And thank you, OB, for helping out. And you guys, we're gonna be announcing something soon. So just stay tuned. And other than that, enjoy your Saturday or Sunday. All right. Peace.